Hello and welcome to our fourth community conversation from our Stand for Something series. My name is Margaret Edwartowski, and I am the Executive Director for Y Arts for the YMCA of Metropolitan Detroit. And I am a proud member of the DIG committee, that is Diversity, Equity, Inclusion, and Global. And we put together these conversations to help all of the YMCA's efforts to make a more inclusive community. Today, we are very excited to address the topic of the racial wealth gap in honor of Black History Month. We're talking about advancing financial inclusion. It's a very important topic and something we haven't presented on before. So I'm excited to talk about this today. We have a couple of amazing guests I'd like to introduce you to. First, we have Dimitrius Hutcherson, who works for the First Independence Bank as Executive Vice President, Chief Administrative Officer, and Chief Technology Officer. Wow, that is a lot of hats. He earned a BA degree in Finance cum laude at Morehouse College and an MBA in Finance and Business Strategy from Harvard Business School. Welcome, Dimitrius. Thank you so much for taking the time out to be with us today.
Margaret, thank you for having me, and I'm just delighted to be here on behalf of the CEO and Chairman Kenneth Kelly and the Board of Directors, First Independence. We're happy to have this opportunity to be a part of this discussion and talk a little bit about the bank.
I look forward to learning so much from you, and it's great to have you here.
Thank you.
We also have with us today Helda Saad, who serves as the Assistant Vice President, Executive Project Manager, Director of Mortgage Lending Operations for First Independence Bank. Helda attended Wayne State University, go Warriors, and Ashford University, where she studied organizational management and business leadership. Welcome, Helda.
Hello, how are you guys? Thank
Good.
you for having us, and I echo Dimitrius' sentiment about us being on your show. We're very honored to be here.
It's a pleasure to have you. And Helda is going to be doing some presenting later in the broadcast. So she's going to give us a lot of wonderful information. Before we get to that, though, we would like to welcome someone who is very important in inspiring and driving this inclusion work that we do at the Y, who put a great importance on our committee forwarding this work, which means so much. And we're really appreciative to have her and glad that she was able to join us today. So please welcome the CEO of the YMCA Metropolitan Detroit, Helene Weir.
Thank you, Margaret. And I'm so proud of our Y moving forward with our Stand for Something series. This is an initiative of our Diversity, Inclusion, Equity, and Global Committee. And the team is doing great work, and we're so happy as the world is changing a little bit for the better around us, and that we'll be able to reach out further even beyond our virtual events that we've done in the future. But thank you so much to our fabulous guests today. Thanks to all of you who have joined us on behalf of the YMCA of Metropolitan Detroit Board of Directors and our staff. It's going to be a great conversation, a great learning opportunity for all of us. And in our 170th year of serving our Metropolitan Detroit committees, we're really thrilled to have you here with us. So thank you, and over to Margaret.
Thanks, Helene. Yes, I think I inverted the name of our committee, which is, thank you for getting it right, Diversity, Inclusion, Equity, and Global, which is a huge and amazing part of the work that we do here at the Y. And while we're at it, I would like to give a couple of shout outs to some of the Y folks that are involved in this broadcast that you may not get to see. The first is our director of these DIG initiatives, and that is Ariel Wilkerson, who is a super talented, driven woman who makes a lot of amazing things happen in our organization. So we're glad to have her support. And also from Y Arts, we have Seth Amadei, who is our technical god, and he is helping us to make sure that we're all heard and seen and looking good. So thanks to the both of you for making today possible. So let's fire into the questions, and Dimitrius, you'll be doing the answering for these. I'm so looking forward to learning more about this because, as I admitted to you before the broadcast, I don't know much. And I think that may be the case for some of our community members tuning in, and that's why we're glad to be able to offer this information. So before I start, financial inclusion means individuals and organizations have access to useful and equitable financial services for banking, loans, investment, and insurance. So today we're going to hear from this amazing organization that's been advancing equity to ensure there are no gaps in financial inclusion in our area. So, Dimitrius, with that in mind, what does financial inclusion mean to you?
Well, thank you for having us, and to me and to us at First Independence Bank, financial inclusion, you start with the word inclusion. Inclusion means being involved, being engaged, having a seat at the table, having products that are really going to be useful and meaningful for folks that in the past may have been neglected for a number of reasons. So financial inclusion means having bank products and a service offering that's going to be and meet their specific needs. We think about, I'm going to give you some numbers. We think about numbers, and it goes back to a few years ago, data from the FDIC. The FDIC said at about 5%, 5.7% of Michiganders didn't have bank accounts, and that's higher than the national average. But specifically, the rate of those that didn't have bank accounts in the Michigan or Metro Detroit area is 8.8%. And for African Americans, which is unfortunately traditionally higher, it's about 23.5%. So bank accounts, banks typically represent a beacon of hope. And when you don't have that hope, and when you don't have those options and products that are amenable and suitable for you, the only alternative is to going to and looking for items like payday lenders, check cashing services, pawn shops, and they typically charge higher products. So coming up with and breaking down the barriers and having products that don't have high service charges or no service charges, and a bank account, or a bank account that allows a person that had a bank account and maybe didn't manage it right to have a second chance at it, is financial inclusion. It's giving them a chance to have something to come to the table and participate in the stability of having a bank and using a bank to have your assets stay and earn money.
What a huge difference in those percentages. I had no idea. So I'm a history nut, so I would love to hear this next part. What is the history of First Independence Bank?
Of course, Margaret. Well, First Independence is going to be celebrating its 52nd birthday in May. The bank was stood up in 1970 as one of the positive outcomes of the 1967 Detroit riots. And as a result of the riots, there was a desire by a number of individuals in the community to try to identify and come up with a financial institution that would unapologetically address and provide financial independence for African Americans, people of color. And there was a concerted effort to really do that. Obviously, through research and developing relationships and garnering support in the community, the bank took a number of years to actually get stood up, and it opened its doors in May of 1970. And it was, again, specifically for that reason, to provide hope and financial independence for people of color. What has evolved over the years is the bank has become a bank that is for all people, Black, Indigenous people of color, and just individuals overall. We are now a full service institution. You can go to www.firstindependence.com. to open up a bank account, a checking or a savings account. We offer products for businesses. We do commercial lending. We do residential lending, auto loans, car loans. We are a full service bank, and we service the community, but we also service business customers as well. And we are also proud to announce that we have expanded to the Minneapolis area, and we'll be opening up within the next week branches. The first branch will open next week in Minneapolis, and in the second part of the year, we'll open up an additional branch. And this is our first foray into the outside of the state of Michigan. We have 2 offices in the Detroit area, and again, we're firstindependence.com is your ability to go in and get services. And we also, although we have 2 branches, we have partnerships with JP Morgan Chase, Bank of America, Huntington Bank, Chemical Bank, where if you have a debit card or a ATM card, you can use your ATM or debit card at those financial institutions and will not be charged a service charge for using that. So we have that accessibility at over 40,000 ATM machines. So that's our story, and I'm just kind of giving you the abridged version. But we're pleased to talk about where we started and where we are today.
Fantastic, and congrats on your new branches. That's very exciting.
Thank you.
So Black-owned businesses have a long history of providing financial service to underserved communities.
Mm-hmm.
How important do you think they are to our present economy?
Wow. Well, they're extremely critical to our present economy. The thing that when we look at statistics, small businesses or businesses for people of color, again, they represent a demographic, and they have services that really speak to the needs of folks in that specific community. And they continue to be relevant to folks in the community. What you'll notice today is that there's a lot of interest in trying to help sustain minority-owned businesses. And it's a result of the fact that historically, it's a lot tougher for minority-owned businesses when they start, because they may not have had the opportunity to have access or knowledge or information on how to keep and sustain their businesses. But there are a lot of efforts and initiatives underway as it relates to the Black Lives Matter movement that are underway to help sustain and allow these businesses to really be relevant and continue to thrive in the community. And there's a desire to help support those businesses in the community, and by folks that look like them and folks that don't but want them to be successful. So it's important. They are part of the economy, and they help to drive spending and all of the economic indicators that help to grow the economy. So they're relevant, and they're necessary as well as important, because the products are really useful.
And those businesses can't thrive without, financial resources, right? So
Absolutely,
you're a major part of that community building.
Yes, what we do, we take a concerted effort to try to not just open checking accounts for those businesses. We will look at and try to evaluate their commercial loan needs and provide them with products to help them grow and expand their businesses. A number of businesses that we have relationships with, we're excited to be partners with them and help participate and support the growth that they are experiencing.
And I'm sure many of them had challenging times surviving, disruption of that during a pandemic as well, disruption of business or income or whatever, right?
Absolutely, Margaret. I mean, and what First Independence had to do, like all other banks had to do, we talked to our customers. We were flexible in some of the ways that we worked through some of the challenges when some of the business volume went down. We worked with them, and we helped them get through those specific periods where the business did slow down. And once things did pick up, they have been able to continue to, really grow and expand their businesses. A great example is when the stimulus money came out and when the Paycheck Protection Program came out. We were one of the banks that were not only here to help our existing customers, we went out of our way to also provide PPP or Paycheck Protection Program loans to some non-bank customers. Then they ultimately became customers of First Independence Bank.
Of course they did. With that kind of support, why wouldn't they?
Sure.
Fantastic. So what steps has your organization taken to progress closing this racial wealth gap that we're talking about?
So we've done a number of things, and I don't want to steal a lot of my team member and colleague and friends' thunder, but what we have done is we have taken steps to provide not just financial independence, but we do it by a number of ways. We provide information, knowledge, and knowledge is power. Once you have that knowledge and that information, it provides you access and the ability to open up and do more with that information to help grow your knowledge of the different types of financial products that are out there. If you are trying to put money in a bank, grow it, there are a number of ways that you can do that. We also, for individuals that may not be well versed in the mechanics of the science of managing money, we provide we call it financial wellness. And that wellness is teaching on how to budget, how to balance a checkbook, the tool and trap that's associated with obtaining credit, how to obtain credit, how to manage it. We have partnerships with an organization that's a nonprofit organization called Operation Hope, and that organization is specifically set up to help build and repair credit and position individuals that, again, through different when they had stations in their life where they had some challenges. Operation Hope works with them to help build and repair their credit and ultimately try to position them to be in a position to buy a home, which is part of the American dream. And we have representatives from Operation Hope in our 7 Mile branch on Tuesday and Thursdays to speak with and help those customers through those specific information to educate and inform them. And it's part of the partnership that we have with organizations like that provide knowledge, financial wellness, along with the things that we do in the community ourselves to help inform the community.
That sounds amazing. And, it's easy to see the sort of overlaps where our missions kind of between the Y and your organization, because really it's all about providing resources for people to live a better life, right? Yeah. To be their best selves. And it's really great to hear the work that you're doing to help people to own a home or start a business.
Mm-hmm. And Margaret, the way we measure, so it's not just important to do it and to talk about it, but the way that we can really evaluate if we're being successful is looking at, okay, we have these products out here. How many individuals are going out to firstindependence.com? What type of account are they opening? Are they opening up a perks checking account, which is our no charge service account, checking account? Are they opening up a first choice checking account? Those are accounts for the underbanked or the non-bank individuals that want a second chance account. We try to track and look at that information, not just for to report, but to show that these are the results that we are realizing. We can say this is where we were and this is where we are, and based on the new partnerships that we have with Operation Hope, we'll be able to evaluate how many people we help put in homes And those are things that we will be able to help to tell our story and validate the relevance of our mission of why we are here.
Margaret, I'd like to add one thing to Dimitrius, and I apologize. One of the programs, and I appreciate everything Dimitrius had said, because that allows me to go ahead and include in this that we are also a part of a program right now with the FDIC that is called Get Banked. It's a huge promotion that's going on to make sure that the unbanked and underbanked are getting banked. So not only through the bank on, but also in Operation Hope, but we're also working with the FDIC directly to make sure that we are getting, you know, the unbanked and underbanked into the banking system.
Oh, that's really interesting to hear about. And I don't know if this is, super relevant, but it's just an observation from where I am. It seems like the underbanked are having even more of an inclusivity challenge with the lack of anything being cash anymore. Without some kind of card, it seems like even the parking by our work at the Y, I noticed, I felt like that was very exclusive. They can't pay with cash. So being underbanked or not having any access to electronic use of money must be a big barrier for some people.
It is, and so the way we have set up our program is by getting a first choice or a second chance account. You initially start out with an ATM card, and you may have a debit card, but with a smaller limit. And after you prove that you handle your account satisfactory, you may graduate from an ATM card to a debit card. And what that means is that when you go to park your car and you have the Pay Detroit mobile app, you can then use that debit card to pay for your parking as opposed to, or you can insert it in the machine, because just about every pay station or every meter now has the ability to insert your debit card and punch in your numbers and have that debit card be used to pay for your parking. So because we are in a cashless society, that's available. Or if you're going out and you go out with friends and you are, you split lunch or dinner and you want to Cash App or Venmo money, you have that accessibility with that second chance account to send what portion of the money that you are supposed to pay for that meal. So again, this whole concept of inclusion, having the opportunity to participate in things that folks that we take simple things like having a debit card for granted, that folks that are trying to kind of start all over and rebuild, they get the chance to do that again. And so we're trying to be mindful of that.
That's great. So how do we counter decades of exclusionary practices and stand for greater inclusion and education of financial practices as individuals? One of the things that we often do with these conversations, because we're trying to, spark thought within the community that might be watching, is give them something they can leave our broadcast with as far as what can I do? Basically. So how can we do this as individuals or as a community?
Well, as a community, we have to talk about this specific event. Talk about this specific event. If it's recorded, share it and share that information with the segment of the market that may not know that products like these are available, because once they know, they can then participate in the overall programs that we offer, the products that we offer. The other thing is that try to find out, unfortunately, there are other banks that are making a commitment to try to offer similar products to help the non or the underbanked folks have access and get a seat at the table and be part of this whole discussion around financial inclusion. Share that information that's out there. Also, there is an organization That's called the National Bankers Association, which is the trade association for minority-owned and women-owned financial institutions. Those talk about those institutions, and some are nationwide across the U.S., but those are partners that are doing similar things to what First Independence is doing. But for the Metropolitan Detroit community, please direct them to www.firstindependence.com. Visit our website, take a look at the different array of products that we have, and we have something for everybody. And that knowledge and that information is something that will expand their knowledge and of what products are out there, because there's something that for everybody there.
Awesome. Yes, for those of you listening and watching, make sure to check out their site to find out more. So how young or how early should families get their youth involved in understanding financial inclusion and involvement in this?
Well, I will tell you, I'd say get them started early. How early? Once you're able to read, write, add, subtract, start talking about it. I mean, conversations that, believe it or not, again, even in a single parent home, some of the conversations cannot just be about maybe how was your day, but let's talk about how to open up a bank account or how to manage money. And, these are getting conversations like that started early are extremely important. Or conversations like, okay, do you know what, investing in a stock is and what that stock can do for you and how it can grow over a period of time? Taking, for example, Amazon. When Amazon first started, it was at a certain price, and we know it's at an astronomical price today. Just trying to build conversations like that into the dinner table or as part of the education. Trying to, if you have the chance and you're a parent and are involved in the PTA with your child, try to understand what type of financial wellness. I don't like to use the term literacy, but they call them, some call it financial literacy. What type of financial wellness programs are out there? Be intellectually curious about it and challenge your cousin, your niece, your nephew, or your grandchild, or your surrogate. If you're a surrogate to some kids or you mentor kids, bring those types of discussion to the table once they are able to read, write, add, and subtract, and multiply and divide. And that's what, 7, 8, 9 kids are learning to read and write and add at an early age. Encourage them.
Well, now I have to get my 8-year-old started on his bank account.
There you go. I think I was about 9 years old when I had and I'm going to date myself, my passbook savings account.
I was going to say the same thing. My little NBD book.
Oh, yes, yes.
It felt good to write that down, though. It's one thing I feel badly for our young people with the, online banking that does all the math for them, but which is great to have. But
it's still important to get them to the table and have those discussions, even if they never said. Because look, we know today you can do your banking sitting at the table on your computer, and so we had to go into the bank, but you can still be at the desk online doing your banking transactions. The key is to start those discussions early.
I probably will someday, though, tease my kid about there used to be a time if you didn't get cash out on Friday, you were in trouble all weekend. Speaking of education, so this has been a really great discussion, and I'm so excited to learn so much from you. And I think Helda has a lot of information to take us over the finish line. So continuing on this education idea, why don't you present to us some of the information you have ready?
Thank you, Margaret. Today I will be introducing to some and to others helping understand the nitty-gritty details of credit and how credit works. What I'll be doing is I'll be sharing my screen just to help guide the conversation and just to help. And this presentation was done by the HUD housing. And this was done to help educate and elevate, right, when it comes to credit. So let me share my screen. There we go. So a lot of people try to wonder, what is credit, right? What's the importance of credit? Why do I need credit? I could use cash. What do I need credit for? So the way credit works, as we know here in the United States, credit is very important, right? There's different scoring models. The reason why we need credit is because it'll help you set yourself for life. It'll help you allow to buy a house, to buy that boat, that car, that, all those financial needs that you need, needs and wants that you want in the future to help you become who you want to become when it comes to financial, being financially wealthy. So the way credit works, it has different scoring models, right? And so the FICO score, it's done by 3 credit bureaus, and that is TransUnion, Equifax, and Experian. And the credit score usually averages between 300 to 850. The 300 obviously is the low end of it, and 850 is the high end of it. And so the scoring model helps creditors understand whether you are financially responsible or not, whether you make your payments on time and all that great stuff. It's also a snapshot of how you handle your money. It allows creditors like banks, like credit card companies, like when you go to get a car, auto loan or auto companies understand whether you're able to put your credit, whether you're able to make your payments on time, whether you're able to make the payment, period, not just make it on time, the full payment. So the credit score is usually, there's five factors. There's key factors or reasons codes. And that is, so you have 5 categories, right, that allow your credit score to become the score that it is. Like anything we did in school, there's different criteria that gave us our A, and this is our criteria to give us our A when it comes to credit, right? And so a huge portion of it, as you can see on my screen, is 35% of it is payment history. And right after that is how much you owe, right? Because the more you owe, the more it tells the credit bureau, it tells the creditors that maybe they're not able to make their payments. Maybe they use more credit than they're allowed, than they make money. And then you have the length of history, that plays about 15%. New credit plays 10%, and then the different types of credit are used. So the difference between like a house and a car and a credit card and a department store credit card. So all of those vary, and we'll go into the details throughout this PowerPoint. So the first one we talked about was, we said 35% of it was based on what payments, right? So that includes anything from public records such as bankruptcy, foreclosures, the amount of time since the most recent public record, the number of days of derogatory public record was late, the amount of owed on derogatory records. And when I say derogatory, that means anything negative, right? You didn't make your payment on time, you didn't, or anything that you filed a bankruptcy, all that information is considered derogatory information, right? And then you also have the 30%, which is debt utilization. How do you utilize your debt? How do you use it? And that is usually about the average balance on your credit cards, percentage owed on your credit cards, ratio of revolving debt of the total revolving limits, and then percentage owed on open installments. And let me tell you what that means. So let's say I have $1,000 credit limit, right? And I go ahead and I use $999 of that $1,000 credit limit. And I'm doing it on a consistent basis. It wasn't just a month, it was on a consistent basis. That to the credit bureaus is like, or the creditors is like, okay, what's happening? Are they not able to make enough money that they have to use their credit? They say usually the best way to use your credit is if you have a $1,000 credit limit, the best, using 35% of it, 35 to 45% of that credit limit usually allows to the creditors to know that you are financially responsible. And not only are you financially responsible, don't make the minimum monthly payment only. You want to make more than a minimum monthly payment. You can pay off the whole credit card, but you also want to make payments as well too, because you want to show that you're capable of making your payments on time, right? So all of those little tiny key factors play a role into your credit and your credit score. The other 15% is the history of credit established, right? How long have you had these accounts? Are you using them? Are you not using them? Are they, and if you are using them, how often are you using them? And how, in the length, like, has it been 2 years, 3 years, 15 years, 30 years? How long have you had that credit card, right? So if a creditor, because usually if you don't use a creditor's credit card, they'll close it, right? And so that allows the other creditors to say, okay, this is just, maybe they're just not using their credit. Maybe they're depending on one card. It helps understand what the difference of how you use your credit and how it's divided. It allows us to understand your financial habits, right? Then you have 10% of it on how your credit is being used, whether it's bank cards, retailer, department stores, and finance companies, right? So, like, very, very, very important to know that there's a difference between a Visa, a Discover card, and a MasterCard, and a Macy's card, right? Macy's card it doesn't score you as well as a Visa and a MasterCard. And then a Visa and a MasterCard doesn't score you as well as a Discover, and a Discover doesn't score you as well as an American Express. Because and the reason being is because the criteria to get those kind of credit cards shows the relevance of how trustworthy you are when it comes to being financially responsible. And so that is some information that's why it's important for you to understand why the difference between credit cards. So when you first start to establish credit card, as you know, a lot of people start with department stores, and that's because their criteria to open a credit card is so easy. But then you move on to a Visa and MasterCard. And then, as you know, that one of the hardest credit cards to get is American Express, right? And so that's because their criteria is a little bit harder and you need more to qualify for their credit cards. The other part of it is another percent is new credit. A lot of people ask me this question all the time being in the mortgage department. Are you going to pull my credit? Is that going to hurt my credit score? I get that question all the time, every time. So yes, you need to pull your credit, and yes, it will drop your score a couple of points, but and the reason being is because so you don't go to every single mom and pop shop and pull your credit. And so but what's cool about that is it brings it right back up within 60 days. Those points don't get dropped permanently. They'll just, once a credit is established and they see that you did an inquiry to develop a credit account, then your credit score goes back up. Does that make sense? So, all right, cool. So that's the other 10% of it. And then now here's the inquiry question, right? Not all inquiries are scored the same. So the following items do not factor into score calculation: marketing purposes, such as pre-approval solicitations, managing existing accounts. So a lot of us get that, oh, you've been pre-approved or you've been pre-qualified. There's a difference between pre-approved and pre-qualified, right? Pre-approved means that there's more likely that they have a little more information about you than you know, and that most likely you're going to get their credit card, right? And then I would say on a percentage scale, 75% of it, you're going to get the credit card, right? And there's 75% chance you're going to get the credit card. Pre-qualified is like, hey, we figured out that you ran your credit somewhere, some way, somehow, and we think we could give you credit too. We don't know what your credit looks like, but we think we can give you credit. So that right there is probably a 10% chance of you getting that credit card because they don't know anything about you. They just have your name, address, and the basic information, public information. And so a lot of us get that information. Do you want your credit shared or not? Do you want your information shared once you open credit? And by what that means is usually is that are you allowing us to sell your information so people know that you just opened credit, right? And my recommendation would be always opt out of it. A lot of people ignore it. My recommendation would be opt out of it because that will allow people less access to your credit, right? Multiple inquiries by mortgage companies and auto dealers made within 30-day period are counted as one inquiry. You'll see it as separate inquiries because, like for me, I will be pulling, for example, Credit Plus versus mom and pop shop down the street. They'll probably be using Experian to pull all three credit bureaus, right? So you'll see the different inquiries, but the hit will be one hit. Does that make sense? That's the difference. Then you also have credit inquiries remain on the credit report for 2 years, but the impact the FICO score for only 1 year. And now with everything that's happening and the way credit utilization has been developed, it's less than a year now. It's become 4 months, 120 days. They can keep it on there for up to a year, just so you guys know. Okay, so different events remain on a credit file for different periods of time. Remember when we were talking about derogatory information, right? Different things remain on your credit for a set period of time. For example, a straight bankruptcy. That is usually on there for 10 years, which is a Chapter 7 bankruptcy. Different bankruptcies, as you could see, there's 3 types of bankruptcies on there that remain on your credit for 10 years, which is a Chapter 7, Chapter 11, and a Chapter 12. Chapter 13 remains on there for 7 years, and that's if completed completely in white. The reason of that being is because Chapter 13, you're saying, hey, I made a mistake. I am financially responsible. Yes, I put myself into debt that I couldn't keep up, but I'm making payments to make it right. And you have 7 years or whatever amount the judge orders for you to make that payment. So once you make that payment, or 2 years or 3 years, whatever it is, that time frame is for you to make that payment. Once you make that payment, then that it stays on your credit for 7 years. So you have, that's why it's a shorter time frame. Judgments, foreclosures, collections, paid tax liens. And as you can see, those are all for 7 years and they're from the date filed, right? And then you have unpaid tax liens. Unpaid tax liens are in there forever until you pay them. Uncle Sam's going to want his money. No matter how long you say, I don't have it, he's going to want his money. He's going to come back and say, I need my money. And then you also have trade lines. Trade lines are on there if they're non-derogatory, they're on there for 10 years from the date paid and closed. However, if they are derogatory, meaning that you fell behind on your payments, you couldn't make their payments, you went to collections, whatever, then that's on there for 7 years. As you can see, charge-offs are also on there for 7 years. And what a charge-off is you basically took a credit card, you used it, and you were not able to make payments to them, and so they accounted it as a loss. You don't have to pay it now, but it's still a loss, and it will be on your credit for 7 years. And then as I mentioned before, 2 years for inquiries. The difference, there are discrepancies between bureaus. Of course there is, because everybody has their own scoring model. So scores are there, some do it based on the credits profile maintained by the repository, and others are there are 3 leading different data that they collect, and they do their score based on that. You'll hear about FICO, you'll hear about credit union, you'll have Equifax's own credit score, then you'll have Experian's own credit score, then you have TransUnion. Most of the times when you go to acquire debt, they will make sure, or credit, they will make sure that they pull all 3 credit bureaus. And so no score is just as, it's not as good, it's not as bad as bad credit, but it's just like bad credit. And the reason being is because no score tells people that you have no accounts older than 6 months. So we don't know whether you can make payments on time. We don't know if you're worthy of credit or anything like that. And then a credit report contains no account with activity within the last 6 months. That's why you don't have a score as well. No recent activity. Subject to social security number is associated with the death master list or as a report deceased. That's usually a red flag if you don't have a score. If you don't have a score too, meaning that you're probably using some fraudulent social security number, or a dispute is in progress, meaning in the file is being locked, meaning that you're claiming that somebody used your credit and you didn't authorize them to. So search criteria for a repository varies, and each assigns importance to information. What that means that each credit bureau, it varies, right? We mentioned that in 2 slides ago. Meaning social security numbers are not the most important search criteria for some credit bureaus. Bureaus will search name, current and previous address, social security number, telephone number, date of birth, and current and previous employer, because they want to know. They want to know if you can keep a steady job. They want to know if your date of birth is correct. Are you 18? Are you allowed to have credit? If your phone number, how often are you changing your phone number, and why are you changing your number so often? And Social Security, does the Social Security match your current address on file in your name? And there's no hit, no record found indicates the borrower's files had no activity within the last 6 months. And information entered to access the file does not match the Bureau's database. And then the borrower's name and address could be different in each Bureau's database. And basically, those are all red flags to the credit bureaus, right? So if you don't come up, if none of this information matches, they're like, okay, we have to figure out something is not right. So the ScorePlus, what's a ScorePlus? It's a rescoring process, right? And so some credit bureaus like CBC and Innovis will do a rescore, meaning if you wanted to acquire credit and your credit score is at 650 and they need a 670, right? You can pay off your credit report, you can pay off your credit card, and you can pay off pay down a balance and ask for your creditor to do a rescore on you. And what that will do, that'll probably do an increase on your credit points. Well, how much will it increase? That's usually unknown, but based on experience, depending on what you're paying, the amount varies, the amount of points vary. What can borrowers do to help raise their credit scores? Only apply for credit when it is needed. Always pay bills on time. Keep balances low on credit cards. We talked about that. Remember the 35%. Pay off debt rather than moving it forward, moving it around. A lot of people say, oh, well, this credit card, I have 0 interest for one year. Let me use this credit card. And then the 0% interest comes due. And then they're like, oh, well, let me apply for another 0 interest and let me transfer my balance to another credit card. That right there is very unhealthy. Conduct rate shopping for auto or mortgage loans during a focused period of time. Don't go shopping for a house today and then 6 months later decide, let me go shopping again. And then 3 months later say, let me go shopping again. That will ding your credit every single time and bring your credit score. If you put your mind to something, move forward with it. Like anything we say in life, right? Put your mind to it, go for it. We were taught that when we were kids. So that's how it works around credit. Reestablish credit if there has been problems in the past. There is second chances, right? For instance, if you've had bad credit and you've had a foreclosure or bankruptcy, you can still buy a house. There's a time frame that you have to wait. It's not 7 years. So there is a chance. Like we have our second chance checking account, first choice checking. I call it second chance because you didn't know how to manage your checking account. And that's why we're giving you a second chance. Now that you're older and wiser, you know how to manage it. The cool thing about being young is that you have now people who are educating you and allowing you to understand, here's how we do it. Let's do it together, right? So that helps a lot. And then there's risk factors, right? There's risk pricing letters for credit bureaus. And this just goes into the nitty-gritty details that I mentioned about earlier. So requirements after January, the letters allow people to understand how you are in making payments and how you are in handling payments and how are you a good credit person or are you a bad credit person, right? Do you know how to handle your finances? And so that goes on to allow me to tell you this. Please, please, please beware of credit scams. As we all know, there's a lot of them, especially nowadays, right? There's that DTE that's going on, that went on for a long time. There's the Social Security, there's the IRS, and they all tell you, we do not call you. If we have something to give you, we're coming for you. We're coming for you legally on paper. So if you're not receiving anything from me in the mail, then it's probably not me, right? So please, please do not give your information to any of the credit scammers. Be careful. Do not, and if you believe, like for instance, it's Discover, hang up and call Discover. If you believe it's the IRS, hang up and call the IRS yourself. That will allow you to be able to figure out what happened. My dad fell a part of that scam not too long ago, where he was called by someone who said they worked for the FBI and they were part of the IRS and that he owed money for his taxes. Now, my dad, being that he was so nervous, he didn't think he didn't owe money on his taxes. So they told him to go buy debit cards. Those debit cards, he went and bought them and gave them the money. And I was like, Dad, but did you owe money on your credit cards? And he was like, no. I said, on your taxes? And he was like, no. And I said, well, why did you give them money if you didn't owe money? And he was like, well, they had me thinking that maybe they miscalculated my taxes. So everybody's gullible. Everybody will fall, will not fall for it, but everybody's gullible and they can make it seem like it's super real. Please, 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 if anybody calls you in reference to that, make sure you hang up the call and call whoever it is that's claiming to be calling you. That's the best way to figure out whether it's real or not. And then educate, right? Educate each other. Allow each other to understand how credit works. Allow each other's, and that's the only way we can decrease the wealth gap, is educating each other and allowing each other to understand how it all works together. And then solutions to, there's a lot of solutions out there to credit problems, like Dimitrius mentioned. We are in partnership with Operation Hope. There's HUD Housing. There's so many different resources out there that help people with their finances and how to figure out how to fix their credit. There's also they have certified HUD approved counselors that allow you to figure out how to fix your credit. And so I will end this with 2 quotes. I always do, just so you guys know. One of them is by Warren Buffett, which is one of my favorites. And if you buy things that you don't not need, soon enough, you will have to sell the things you need. So it's very important to understand credit and how to use credit and not buy things you don't use on your credit cards. And then the other one is by Marianne Williamson. And she says, financial health is restored in 2 ways. The first, by doing the inner work of changing how you think and feel about money. And then the second one is by doing the outer work of practical money management, budgeting. Make sure you budget. And budgeting and banking and credit, they all work together to make you look like the 850 credit score that we're all aiming for. Thank you, Margaret.
Thank you so much. What wonderful information. And I definitely was jotting down lots of notes as you spoke, because I think everybody, no matter how great they are, could always improve their credit score. I always think about it, it's similar to your GPA. Once it goes in the wrong direction, it's really hard to get it back.
Right.
But I think that the work that you are doing is so vital to give people a second chance. Like, if they didn't mean to, but things went south, how do you get it back? So that's really amazing.
We've all been there. I, for one, was one of them. You know, so we've all been there. My dad gave me my first credit card was an American Express, and it was the gold, and I didn't have a credit limit.
Oh my!
And I used it, and I was a college student. So I used it left and right. And I
convinced myself if I didn't have any, if I didn't spend anything, that my credit was going to be amazing. And then I finally learned that thing of, like, you have to actually use it and pay it off to build any kind of rating. So
right, you don't use it, you lose it, like with anything else in life.
Exactly. What an amazing discussion, and thank you so much. I learned an incredible amount, and I hope that our viewers will have gotten what I got out of it today. Any final? You want to mention the website one more time, maybe, Dimitrius, in case anybody wants to log on?
Yes, please feel free to visit www.firstindependence.com.
Thank you both for all you're doing for the community, and thank you for taking the time for speaking with us today. And thanks to our friends, Helene, Weir, who was here earlier, and of course, Ariel Wilkerson, Seth Amadei, and Doug Edwards, who, was here in spirit on our Zoom. It's good to have our Y family with us, and great to have these great community members with us. We hope that you enjoy the rest of Black History Month, and we hope to be back with another great community conversation very soon. So thank you, Dimitrius. Thank you, Helda.
You're welcome.
You're welcome.
Onward.
I will leave my information in the chat so it will be available to everyone later. My information, Dimitrius' information, and feel free to email us on any questions or concerns you guys have. I always say, please email me, and I've had people email me, so please email me with any questions.
Fantastic. Thank you both so much. And everybody have a great rest of your day.
Okay, you do as well.